Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. A couple of interesting aggressive growth stock picks here for you now. And Bill Wilton, our aggressive growth stock strategist, wants to make you aware of them. LSB Industries being one of them, LXU the ticker symbol, a manufacturing, marketing, and engineering company all rolled into one.
Yeah, what they do is they make commercial and residential climate control products, all sorts of different ventilation and air conditioning, temperature control devices. They also have a chemicals business that they offer different products to the mining, agriculture, and other industrial markets. So they do have a pretty diverse business model that they're working with. Their most recent quarter that they reported was back on August 8th. It was fantastic. In fact, management called it one of the best quarters in recent history. They beat expectations by 15 cents, with earnings per share coming in at $1.22. That was driven by a 40% increase in the top line. They're also seeing the estimates push higher for them. That's what's got them up to that Zacks #1 rank. And right now with those higher estimates, they're expecting earnings to nearly triple this year, with the growth rate at 176%. Next year it's a little bit more modest at 7%. But we are seeing these estimates at historically high levels. Here you can see where those consensus estimates are coming in relative to the price. And when you see the divergence like that, that shows that you're probably getting pretty good value. And when you look at the actual numbers, shares are trading at about 9 times forward estimates. That gives them a PEG ratio of 0.8, meaning that future growth is priced at a nice discount. So it's a good time to get in if you can stomach the volatility, because they are so heavy in a lot of industrial late cycle markets. That's going to make them a tough play in this type of market. But with these valuations, if you can hold on to it for a long time, you could do pretty well for yourself.
All right. And then you've written about a company called Embraer S.A. I always include that because I don't know if you should or not. ERJ is the ticker symbol anyway.
Yeah, they make commercial jets up to 120 seats for both civil and defense applications. Their last earnings report was back in July, but it was a good one. The one thing I was most surprised about is that management saw that the aviation business was still growing, because that is one of the last purchases companies are going to make, is investing in huge expensive airplanes.
Yeah.
And they're still seeing their backlog grow. Their earnings per share came in at 53 cents, which was 7 cents better than expected. And like the previous companies, shares are pretty cheap right now, mainly because we have seen a big sell-off in the market. But with growth estimates at 18% and 17%, you can see some consistent performance from these guys over the next couple of years. And here's a look at the chart. While they did get hit hard when we sold off, along with a lot of other people, these guys got hit particularly hard. But people came in and are scooping up the shares at those nice valuations. Here, even after we've been trending higher for a little bit, we're still at 12 times the forward PE estimates, and with a PEG ratio of 0.7. So.
All right. Do you own either of these two?
I do not.
More stock picks for you on the homepage at Zacks.com if you're viewing this video from outside of the homepage. 4 new ones for you each business day. With Bill Wilton, I'm Terry Ruffalo.